Hey everyone, I'm going to make my case for why gig economy platform company Upwork, down 82% off its high and trading near $10 per share, is a ridiculously cheap stock for long-term investors to add to their portfolios or consider adding to their portfolios. So I'll share with you the company's revenue growth, its profit margin, its cash flow. I'll share with you the prospects over the next several years, the internal company metrics and its prospects going forward, and justify why I think this is an excellent growth stock that's undervalued at current prices. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I shared with you, Upwork is down 82% off its highs that were reached in early 2021. Of course, in 2021, remote work was a lot more popular, and Upwork was benefiting from that surge in companies both looking to hire people remotely and folks that were looking for remote work. And so those trends worked in Upwork's favor in that time. So I'm going to update this stock here. I'm going to rate it as a buy, and I'm making this recommendation on May 29th. Of course, these are my list of stocks to buy, hold, sell. I have a list and I update this list regularly. Right now, as of right now, the only way to get access to this list is to watch the videos, and I share the list in the videos. I usually share this list in every video. So not only do you get a peek at the stock that I'm recommending in the video, but also you'll get a peek into the other stocks that I have rated as buy, hold, or sell when I make these videos. So I've recently updated my Upwork recommendation here, recommending it as a buy. So one of the reasons why I like Upwork stock is the revenue growth. In the last 6 years or so, the company's revenue has increased to 719 million in a trailing 12-month period. That's more than triple the roughly 200 million in revenue it generated in 2018. Now, the convenience benefits Upwork adds to businesses and individuals will likely be a tailwind for continued revenue growth over several years. It's so much more convenient to hire people as a gig or a contract employment instead of a full-time employment. And for folks looking for work, it's more convenient to work remotely, and it's more convenient to work in this fashion than it is to work full-time as well, because you get to have a more flexible work schedule. You get to work from home, you get to work as much or as little as you like to when you're doing this type of work. It's not for everyone, understandably. Some people prefer the security of a full-time job, but for others who want more flexibility, Upwork is a nice change of pace for those folks looking for that kind of work. Now, in its latest quarterly update, Upwork gave some critical updates to investors. One of the key metrics here is the take rate, and I highlighted that Upwork is a gig economy platform. It brings together those that are looking to buy services with those that are looking to sell services, and it takes a fee from every transaction on the platform. It also generates some subscription revenue, but mostly it generates its revenue from fees on transactions, and that fee increased by 290 basis points to 18.9% in the first quarter of 2024. That was just 16% in the first quarter of 2023, so a big jump there. And Upwork is way behind its rival Fiverr, who charges closer to 30% take rate on the platform. So Upwork has a lot of room to continue increasing this take rate before it approaches its main rival Fiverr in terms of the take rate. So lots of room for upside here in terms of the transaction take rate for Upwork. And Upwork has been adding active clients on the platform, up 5% year over year to 872,000 in the first quarter of 2024, up from 827,000 in the first quarter of 2023 and 851,000 in the most recent quarter. So 21,000 quarter-over-quarter increase and almost 45,000 year-over-year increase in active clients. So Upwork is increasing the number of folks that are hiring on the platform. So one of the major initiatives Upwork launched a year and a half ago, late 2022, was an improvement on profitability, and that is paying off big time. You can see that big change here from Upwork's strategy of just focusing on growth without thinking about profitability, and that was leading to a big decrease in its operating profit margin. And then in late 2022, right at the same time when the Federal Reserve in the US signaled that it was going to increase interest rates and the cost of capital increased, making it more expensive to run an unprofitable business, Upwork changed course quickly and shifted and was able to generate profitability very sharply, very quickly. And I was impressed with that quick turnaround here from a negative and falling operating profit margin to a rising and positive operating profit margin, 3.73%. I wouldn't be surprised if this continues moving higher going forward, given the company's strategic shift. Similar, cash flow from operations turned positive and is moving upward here since late 2022, 5.78%. Even though it's low right now, it's moving in the right direction for Upwork. And finally, Upwork is trading at a ridiculously cheap forward price to earnings of 9.971 in the single digits for a company with its prospects going forward. I think is a very attractive and cheap valuation. It's, of course, one of the primary reasons I have rated Upwork stock as a buy here. And it's especially cheap when you compare it with its forward earnings per share forecast. Over the next 5 years, the analysts on Wall Street that are following Upwork stock, they think it's going to grow its earnings per share by 109% each year over the next 5 years. Next year specifically, they think it's going to grow its earnings per share by 19.6%. Now, this 109% earnings per share growth rate might be optimistic, to be sure. Still, even if it grows its earnings per share at just 19.6%, it would still be an incredible bargain at a forward price to earnings of less than 10. That can partly explain why analysts on Wall Street have a price target of $18.60 for Upwork stock when it's currently trading at just over $10 per share. So a lot of upside here for Upwork stock. And I agree. I've had Upwork stock rated as a buy for some time. And in this video, I'm reiterating that recommendation, highlighting that I think Upwork is one ridiculously undervalued stock that long-term investors can consider adding to their portfolios at current valuations. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.